Zach Lemaster. Zach is the founder and CEO of Rent to Retirement, the nation's leading turnkey investment company, a former optometrist and captain in the U.S. Air Force. Zach transitioned into real estate investing, building a diverse portfolio across single-family, multifamily, and commercial properties. Without further ado, welcome to the show, Zach.
Hey, Eric, thanks for having me on. I'm excited to be here.
Yeah, well, I'm glad to have you as well. You have quite the pedigree. You've done quite a bit. And to hear that you're doing extremely high volume of turnkey deals, even in high interest rates, is really remarkable. And so I'm really interested in unpacking some of those details. But before we get into that, if you could share just a little bit more about yourself and also how you got started in real estate, that'd be great.
Yeah, I'd be happy to. So I have a background, nothing to do with real estate, as you just mentioned, like many of us do. So, my wife and I are both optometrists by education. And, we spent 8 years going to school, got married. I joined the Air Force right after, actually, I joined while I was in school because I was on scholarship. So I was commissioned as a captain in the Air Force. Immediately upon exiting optometry school, spent about 7 years in the Air Force and practiced optometry during that period of time. I was stationed in Germany and North Dakota and bounced around. And then I exited the Air Force and moved out to Colorado, which is where I'm at today, and owned and operated some private practices for a little bit before we basically retired ourselves, through real estate investing from that career path. And it's not that, I always tell people, it's not that I disliked what I did. We're really passionate about real estate or about eye care, and we still work on a volunteer basis and do, we're very active in that. But real estate just allowed us the opportunity to do that on a volunteer basis, right? And create a lifestyle where we didn't have to rely on that for income. And that was a really cool place to get to. But it didn't happen overnight. It happened over, many years of dedicated, intentional investing, specifically across the country where the numbers make the most sense. So when I was a young captain in the Air Force, I bought my first house, which was a duplex, lived in half, rented the other half, covered my expenses. I thought, wow, what a great concept. And I continue to invest every single year since then. There hasn't been a single year, and this is probably 14 or 15 years ago at this point, Eric, there hasn't been a single year that I've taken off from investing. I'm not saying every deal has worked out or I've made money on them, but I kept going, and consistency is the key to success in this game. But there was a real pivotal moment where it really changed the trajectory of our lives and our business. And that's where we started to look to invest out of state because our local market maybe wasn't the most attractive market. We did okay. We started there, but we started to be educate ourselves about different markets around the U.S. and found hey, there's a heck of a lot better opportunity actually in these different areas. So wouldn't it be a smart thing to do to actually focus on where the best opportunity is to invest and then try to focus on those markets? Because that's what we saw the most successful investors doing. And that's exactly what we did. So we started to identify the best markets throughout the country, build our teams and systems in these areas. And that took some time, of course, and was very challenging. But through that, we were able to essentially buy a portfolio of properties that appreciated well, that we had immediate equity on, that cash flowed really well. And, because of that, being strategic investors, we were able to retire ourselves early in our career path. And that was a birthplace of Rent to Retirement, is just helping people. We found there's a lot of people that approached us about doing the same thing that we did, but they didn't have the time, the energy, the knowledge, the money. So they basically came to us to help them invest in the most strategic parts around the country where our teams handled everything from management and everything else for them, because we already had a presence there doing that for ourselves. So that's pretty much as quick of a story as I can give you on our background.
Yeah, that's amazing. That's a really quick overview, but you covered, it sounds like a time span, maybe 15 years or better. But yeah, so first off, I want to say thanks for your service to our country. It's always an honor to have military professionals or people that have experience being within the military on the show. And so, but bringing things up a little bit and touching on some of the things that you covered, how long did it take you to exit the optometrist career while buying real estate? How long did it take you to actually be able to successfully exit?
Yeah, I'll talk about the timeline with that, because there's different kind of levels of financial independence is the way that I view it. And just to be clear, this was never our goal. I never had the intention that I wanted to own this large portfolio of real estate, run this active business in real estate. We just liked investing in real estate, and we just always were trying to be better investors and find better opportunity. And we just never stopped. And so it kind of fell into this just through consistently investing. I never had the plan to retire myself. That was not the goal. I did have an initial goal hey, it'd be cool if I had X amount of dollars of cash flow to cover my expenses, which at the time, pre-kids, is probably $3,000 a month, And that took us, I think we accomplished that within about 4 years of investing. And it was pretty slow. And I think this is true for a lot of people. It's pretty slow investing starting out because, you're kind of learning, you only have so much capital, you don't have momentum from your actual properties yet. But once you build equity in your properties and you go through like your first 1031 exchange where you're selling one property and turning that into possibly like 3 or 4 properties because you're trading up that equity without having to inject any more capital into your portfolio, that's where you get this hockey stick growth. So it's probably between year 3 to 4 where we covered our expensive and passive income. And then I think it was around year 5 or 6 when we actually surpassed our active income, which was 6 figures. We had professional careers. But what we found is we've gone through, we bought in good areas that were appreciating and they cash flow very well. We probably had a little bit of immediate equity coming in there, buying below market value. So we had good buys on these properties that were really good rental properties. And those went up in value over, 2, 3, 4 years. And so we had a significant amount of equity that we built. We saved our cash flow. We didn't spend it. We wanted to reinvest it. And so we reinvested our cash flow. And then our equity that we built up through appreciation and the tenant paying the loan down over time, we sold those. Then we did the 1031 exchange. So we didn't have to pay capital gains. And took a property that maybe we bought for 150 that's now $400,000, years later being in the right market, and then selling that up and trading it up into larger properties. And we went through that a couple of times, and it's like, holy cow, now we have a really robust portfolio that we expanded our cash flow. And, and then we got to probably year 5 to 6 is when we replaced our active income. And it's not like I quit immediately. I just reduced my work hours. I was like 5 days, 4 days, 3 days. And eventually I was just like, let's just do this on a volunteer basis. And then probably a year between 8 to 10 is where we got, got to that third level of generational or financial independence, which is like truly creating. It's not just replacing your income. It's like being able to live a life that you wouldn't have been able to otherwise. And having, just between our business and our portfolio, being able to kind of create generational wealth, especially being sophisticated on the tax benefits of real estate, which is another thing that's just mind blowing once you understand your taxes. We have a very, very successful business, and our goal every single year is to buy enough real estate and offset our active income from all sources. From all sources, not just our passive income, our active income from we don't have W-2s anymore, but at the time, like replacing or not paying taxes on W-2 income, all the income sources, because we'll do creative things like the 1031 exchanges and accelerated depreciation with cost segregation studies. All those things are really powerful. So by implementing all those things, that was kind of the progression of our wealth building through real estate. And the more we learned about real estate, the more successful we became, and we just kept investing.
That's very smart to go incrementally instead of all in, do the burn the boat method, in which a lot of guys have done. And some people to their peril, and to some people, they actually fare it very well. But I am more of a fan of incrementally and taking steps to be able to achieve that financial freedom. And it sounds like that's exactly what you guys did. So you covered your expenses within 4 to 5 years, and from 5 to 6 or 5 to 7 years, you guys were able to cover your active income. So great job for you guys, and hats off. So when you were working while buying this real estate, how were you managing your time, and was your wife helping you through this process? I know you guys had really busy W-2 careers and really demanding jobs. How are you guys structuring things?
Yeah, well, this is very applicable to your audience and your show, being, talking about moonlighting and the real estate side hustle, right? Which that is a beautiful thing about real estate, because it can start as a side hustle, right? You should still approach it like a business, and you have to dedicate X amount of hours, but you certainly can work your W-2 while building a side business that eventually maybe could replace your full W-2, like it did for us, right? And that can happen if you can consistently stay the course and do some of the things that I talked about. But for us, I've always been a hustler, man. Even even early on in the Air Force. I mean, I've always worked since I was probably 12 years old. I had I grew up in the country in Wyoming, and so I got a hardship license where I was driving around. I had a little Honda 90 motorcycle since I was like probably 8 years old, driving to jobs before I even had a license, So I've always been a hustler, but it's all about using your time efficiently, right? Like if you don't, and not everyone is blessed with a position where they have to. Some people, especially now that we have kids, it's like we have no time. But we did it at the time. My wife wasn't super involved in the real estate. She was supportive and she thought it was somewhat interesting, but like she just didn't really want to be that involved, which was okay. But it's finding the time. So waking up early before your W-2. I mean, I had a 30-minute commute when I was driving out to base. For some of my due stations, I was on the phone with people, right, trying to negotiate deals. So it's finding those times, not going home and binging out on Netflix. It's like, what else can we do to use your time efficiently? So that's always served me well, and I've always hustled, and you had that entrepreneurial mindset, and you kind of have to if you're going to be successful, right?
Definitely. Yeah. So first off, congrats to you. You did an amazing job. You've built an amazing business, it sounds like. And if we could, let's bring things up to more current events. As of today, what are you guys doing to stay in the forefront and still thriving within this high interest rate market? There's been a lot of investors that's been impacted significantly due to the high interest rates, but just our brief conversation before we went online, it sounds like you guys are still making some really great progress. And even during those initial interest rate hikes, you guys still were performing at a really good level. So if you could share and shine a light briefly on what it is that you guys are doing and how are you guys still moving forward within this current environment?
Yeah, and I'll say this: it probably helped to define our business a little bit. So, Rent to Retirement is, as you mentioned, Derek, we're the nation's leading turnkey investment company, and I think we're a little bit more in the build to rent space than like the turnkey classification. But turnkey is a buzzword, right? It's just something that people hear about or use, and it's kind of poorly defined, and people have different opinions like what turnkey is. So, I just want to clarify what that means. So to us, at least when we use the term, so turnkey means that our company, our motto is to make the best deals across the country accessible to everyone, where our team handles everything for you. So you as the investor, regardless of your experience level or where you're located or regardless of your time, we can help you strategically build a strategy and a plan and help you and invest in the locations that offer the best returns. Without having to do everything on your own, trying to invest out of state, right? Or get started investing or build your own management team from the ground up and source contractors and analyze markets. Like we've done all of that for you. So you just get to own the asset and benefit from owning the asset without having to, take the risk and time of doing those things on your own. And I think that's really important and serves a need for a lot of people. If you're someone who, is a busy W-2 person or self-employed and you run your business and you want to invest in real estate, but you're like, I just don't have the time, right? Or the energy, then this could be an easy way for you to strategically own some of the best assets across the country without having to really dedicate your time and buy yourself another job. If you're someone that lives in an expensive market and your local market doesn't make sense, if you're someone that is a newer investor and you just want to avoid common pitfalls and mistakes, like that could make a lot of sense for you. But the first thing that we do is we identify the best markets throughout the country where there's investment opportunity. These are things like landlord-friendly legislation, low taxes, diversity of industries, economic and population growth. We want to be below the median house price point of 400K. So we actually do quite a bit in your backyard in KC, Eric, but we work all across the Midwest and the Southeast. We mainly do new construction builds. About 75% of what we do is build to rent. These are brand new construction, A-class single family and small multifamily properties. We also renovate properties as well, and then we lease and manage them for our investors. And so the goal is that you can buy a property in a good market that has good positive cash flow, appreciation, and equity, because you can't have all three in one area. You just have to be in the right market. And then our team's going to handle everything for you and help you build a strategy on how to be successful. We have the right, insurance providers, obviously property management. We have the right lenders. We talked a little bit before the show. Like we have lenders where you can buy multiple investment properties with as little as 5% down. And we're not talking about a live-in flip or a house hack. This is a true investment loan with a local credit union where they're offering portfolio loans where you can buy multiple properties with as little as 5% down. That allows you to stretch your capital further and buy more properties, right? We have new construction properties where you can buy them anywhere from $30,000 to $50,000 below market value, where you get a significant equity position coming into the property. Or we help you be strategic where it's like, hey, if you don't want that equity position, we'll actually give you that cash back at closing. So like on a $300,000 house, if we have a 10% incentive for our investor, that means they can take 10% of the purchase price and use it however they want. So on a $300,000 house, they can buy it at 270, have a $30,000 immediate equity position. Or if they want to buy it at market value and not take an equity position, we'll give you that $30,000 back at closing, right? That's extremely powerful. That's extremely beneficial. So think about this. If you're buying a brand new construction A-class asset that's positive cash flow and you're putting 5% down on it and you're getting 10% back, like you can buy a new construction property with zero money down and possibly get money back in your pocket. And these are A-class assets, new construction homes. We do a lot in the Southeast, so areas like Texas, Georgia, the Carolinas, Georgia, Florida. I mean, these are areas that are really growing quickly, and you have strong appreciation, equity, and cash flow. So I go through all of that, Eric, to answer your question of like how we've been able to be successful over the past 2 years when interest rates were higher is because we've been, one, focusing on the markets that still have good opportunity. There are still markets, even with high interest rates right now, that have double-digit cash-on-cash return, have significant cash flow, and still have had double-digit appreciation year over year. And that's mainly due to supply and demand. We're being in areas where they have an undersupply of houses, there's population growth, there's just a huge deficit of housing and affordable housing in those areas. And so those are the areas we want to be because that's where you're going to have quality tenants that keep renting the house. So focusing on the right location and being unique with the buying opportunities that we make available to investors, we can still make very viable investments even in high interest rate environments. The last thing I'll say is that there's a lot of people that focus on interest rates and they're like, man, this property doesn't cash flow very well, or I have to put a little bit more money down. Guys, interest rates are just a point in time. It's just a point in time, right? It's very unlikely that you're going to, in fact, I think it's foolish if you're buying a property now and keeping that interest rate forever, right? Most people refinance on their house within a few years. Anything you bought over the past 2 years, you're likely to refinance in another year or two. You probably should as interest rates are finally starting to come down. But it also, in high interest rates, it allows better buying opportunities because there's less people in the game, right? So buy right now on some of the new construction stuff like I talked about, where you can get, $30,000 to $50,000 below market value. Then you can refinance in a year or a few months when the interest rates are lower. And then you bought a property now that you wouldn't have access to buy in a hotter market when there's more investors, and you've just maximized your cash flow, right? So it's all about being in the right market, having the best investment opportunities, and just knowing that this is a long-term game, right? You got to be buying property every single year and just finding the right opportunity. So I know that's a really long answer, but hopefully that helped.
No, it definitely helps. And to have that mentality, that's key. You have to be steady in the game because there's so many people, they sit on the sideline and there's opportunities to be made. You just need to locate the great opportunities and they are out there. You just have to source enough deals in order to be able to capture it. So great explanation on that. Now, curious, are you guys syndicating these to get out front and then get them prepared for the turnkey investors? What's the model on that front end for you guys?
No, we don't raise capital. We don't do any syndications. We help investors acquire their own portfolio, right? So we help you acquire your own portfolio that you have 100% ownership and 100% control over. We don't keep any equity in the property. We make our money through building and selling houses. So we don't charge investors anything to work with us because we don't need to. We make our money when the property is sold, whether that's retail to an investor, whatever the case is. And so our goal is to help people build their own portfolio over time, that they physically own. So yeah, we have construction loans and, do land development and build the houses and then lease and manage them for investors long-term or sell them, to retail or whatever.
And what kind of returns are investors able to achieve if they do present or come and take you guys up on an opportunity to purchase a turnkey property from you? What type of returns can they receive?
If you're talking about just cash on cash return using leverage, and on our website at renttoretirement.com, it has all the inventory. We'll have 50 or 60 houses for sale all across the country. We currently are active in about 18 different markets. And those markets are different because some of them have different price points. Our price points are as low as $120,000 in the Midwest for maybe a B class or upper C class, single family house. Upwards of that $350,000 range for a brand new construction A-class asset in the Southeast, and everything in between. We actually have some stuff in Missouri where we're buying new construction or building new construction 4-bedroom houses for around $210,000. So that's actually our cheapest new construction market. an area around Joplin. So it's a little bit more rural, but there's also some big jobs coming into that area. But cash on cash return, you're probably anywhere between, I would say, 10 to 15% if you're using conventional 20, 25% down loans. Maybe some of the new construction stuff will be a little bit lower, 6 to 8% cash on cash return. You would expect higher appreciation on those. But that's just your typical evaluation, right? But if you look at the full picture of the investment, which you always should as the investor, like, what are all the other things that are important? Our average rental increase, Eric, year over year is 6.5%. That's over double the national average. So, your return in year one is still good, but your return in year two, when your rent goes up significantly and your mortgage doesn't go up, your expenses shouldn't go up, especially on new construction. Like, your cash on cash the next year should be significantly greater. And once you factor in, if you're buying a house at $30,000 to $50,000 below market value, you have immediate equity. That adds your return on investment, right? Also, the houses are appreciating and growing in these markets. Or if you're using some of the creative loan structures I talked about, where you're putting 5% down, or possibly doing the 5% down where you get a 10% kickback, where you're into a property for zero money down, your return on investment's infinite, right? If you're zero money into the deal, and at the end of the day, because you're structuring it with the right financing, with the right terms that we're able to offer, then yeah, you could have returns that are infinite, or 200-300% if you're structuring it the right way. So, and that's what we try to do with our investors, is help them build out a strategy that makes sense for them.
Okay, that's really interesting. If you could elaborate a little bit more on that 5% down, how do people go about qualifying for that? I mean, is that open to everyone, or do you have to have certain qualifications to be able to achieve it?
Yeah, and this is just one example of many different loan options that we make available to our community. Because often, our community, we have about 300,000 investors in our community as a whole. And so we just have a very large community that's buying a bunch of real estate all the time, right? And so because of that, we're doing volume. We're able to go to different lenders, and that will actually create loan products for us, or bring loan products to us that, we may not be unfamiliar with. So my point is that these are just a couple of, this was one example of many different loan structures that we make available to our investors. At the end of the day, you can use whatever loan you want to buy the house, right? We don't care, but our goal is to educate you and provide you with the different loan options. Specifically with the 5% down, which I've referenced a couple of times, this is a loan. It's a portfolio loan with local credit unions. So it's not available in all markets, but it is available in many markets, most markets we work in. There's local credit unions that we've helped develop this loan product. It's a portfolio loan, meaning they hold it in-house at the portfolio. They underwrite it at the credit union, and they hold the loan. They don't sell it on the secondary market. It's not a Fannie Mae, Freddie Mac conventional loan. This is a true portfolio loan where credit unions can just come up with whatever terms they want. You do still have to qualify, right? They just don't give it to anybody. Like, your DTI needs to be below 45%. Your credit needs to be at least like 700, I think, to qualify for the full 5% down. Or you may be, if it's not 700, you're below that, maybe you're 10% down or something like that. It's amortized over 30 years. So your payments are based on a 30-year loan, but it's a 10-year term. It's a 10-year term. So that loan is due in 10 years, either refinance it, extend the loan, sell the property. It's very unlikely that you'll have a loan in there for 10 years, but that's what the loan terms look like. Two other points with that one. There's no prepayment penalty, which is really important with portfolio loans, because many of them have prepayment penalties. So you could turn around and refinance whenever, like if interest rates come down, over the next 2 months, you want to refi, there's no penalty to do that. And there's no PMI. That's really big, right? If you have a conventional loan and you're putting less than 20% down, you're paying mortgage interest with a conventional loan. Here, there's no mortgage interest. So really attractive loan structure if you can qualify for it. And you can have up to 5, the credit union will go up to 5 loans per person at one time, 5 portfolio loans per person. So one person could, put 5% down on 5 investment properties. If you had a spouse that's not on that loan, they could do 5 as well.
Okay. Yeah, that's really helpful to just put 5% down on a property. That's unheard of, especially for an investment property. Typically, the go-to down payment is going to be somewhere between 20 to 30% down, but you guys are offering an excellent product there for your investors. Hey, Zach, we're going to turn the page here. We've got a portion of the show that we like to call our Moonlight Coaching Round, and typically what we do is ask a few questions. If you could hold your response to between 1 to 2 minutes per question, that'd be excellent.
I will try my best, Eric. I'm long-winded, but I get it. I'll go quick.
First question I have for you is, what do you think every new real estate investor should know before investing in real estate?
I got two pieces of advice for any real estate investor, and you've probably heard them before, but like one, I'll say three. I'll make this quick. One, you obviously got to get started, right? Get in the game. Don't get the analysis paralysis. Quit reading all the books and listening to all the podcasts and thinking you're going to know everything. You'll never know everything. Real estate investing, you learn by doing. Don't get the shiny object syndrome, because that means you're going to try out 1,000 different things. And everyone gets this early on as a real estate investor. Stop looking at everything under the sun. Choose one strategy and do it. And do it until you're good at it before you look at anything else. You're never going to be successful trying to do 1,000 things at once. And the third thing is be aware of different markets across the country. That was the single most important thing that changed our investing trajectory, is just investing in markets outside of our local area, outside of our comfort zone, because we had 10x the returns in those markets that we would have received in our local market. But if sometimes you just don't know what you don't know. So start looking at markets outside of your own backyard.
The next question I have for you is, knowing what you know now, what kind of advice would you give a person attempting to get where you are within your real estate journey about balancing business and life?
I'm a bad person about balancing. It's interesting. People, I think, are attracted to real estate because they want some level of financial independence, right? And they just want that so bad. And then once you get it, once you're lucky enough to get it, you've worked hard enough to get it. It's like, okay, I'm actually like working and just grinding away, right? And so, but it is about like, hey, I can have the choice to disappear for 2 weeks, and my business isn't reliant on me, and I'm still going to earn the same amount of income from my rental portfolio, whether I'm there or not. Looking back, everyone can say, I wish I got started sooner. I wish I was more aggressive early on. But guys, really the key to success in this game is consistency. Even when you lose money on deals or you hit obstacles, because you always will in real estate and business and life, all the things, you just got to keep going, right? The people that are successful in this game are the resilient people, the tenacious people that keep on going. It's consistency.
Okay. Well, the next question I have for you is, if a person had minimal amounts of time, no money or experience, but they wanted to start a business like yours, operating a turnkey business, what steps would you recommend for them to start and scale a business like yours?
Yeah, it's tough for someone with no time, money, or experience to start this. You need those, right? Like you need probably all of those. But my advice to you is to get into real estate first, right? Like you got to build the track record first. You got to build the experience. You have to be knowledgeable, and then you can teach others. And it doesn't have to be turnkey. It could be anything. All these real estate entrepreneurs that have these successful businesses, they all started just like myself as a new investor at some point in time that just kept investing. And like I said, they put the blinders on, they hyper-focused on one strategy. They got really good at that strategy, and then they taught other people how to do that. That's your ticket to business and wealth, right? And when you have a business in real estate and you can minimize your tax benefits, buy real estate, like get in the game, learn a strategy really well, and then teach others how to do it. And that's where you expedite your wealth and create financial independence. And everyone has some, time, money, and experience. Those are all on different spectrums. You probably do have a lot of one of those things. Maybe early on you have more time, less money, and less experience. Then you dedicate your time to learning and doing and working for other people. If you're later on in your career, maybe you have less time and more money, maybe still no experience. Well, guess what? Invest your money with the right people and learn from them. So think about your strengths and weaknesses, and whatever of those three categories you do have, utilize that and build the other ones however you need to do it, right?
Final question, Zach. What is the greatest coaching advice you could give to a new person about knowing their numbers, whether that's KPIs, taxes, income, expenses? I'm sure that you guys, when you were building your business, you had to count the lead volume. You had to contact individuals and try to get some great opportunities to be able to learn or get the knowledge base that you currently have. What kind of coaching advice could you give to a person about knowing their numbers, whether that's KPIs, taxes, income, or expenses?
Oh God, there's so much. I can't answer this one in 2 minutes, Eric, but I'm going to try to keep it short and throw out a few nuggets of knowledge here, I guess. But Man, yeah, you do have to know the numbers, right? But I also think I actually think people overanalyze more than they underanalyze, and they analyze so much that they don't do anything, right? This is the proverbial the analysis paralysis, right? That everyone always we always hear about. But here's the thing: I would really encourage everyone to understand how real estate truly works. And quit focusing so much on just cash flow. Yes, we want to have positive cash flow, but people build wealth. People build financial independence and wealth in real estate, not through cash flow. Guys, cash flow is a byproduct of real estate. How you build wealth is by creating value in real estate, running businesses, owning assets in good locations with good teams where they will appreciate over time, where you can use leverage strategically. Leverage is an extremely powerful tool. And understanding, like you said, that the tax benefits, because the tax benefits, guys, are outrageous in real estate. We run a successful business, like I said, and our goal is to offset all of our taxes every single year through buying enough real estate. Being in the real estate game, that's available to you. You're incentivized to do that because the IRS incentivizes you to create jobs, to create housing, to stimulate the economy, like they want us to do as real estate investors. So you have to understand, I would say the biggest piece of advice, and I could have a whole segment on business. I'm not even going to mention business, but just in real estate in general, focus on all the areas that you grow wealth in real estate and make sure you understand all of those. We call real estate the ideal investment. It's an acronym for all the ways you build wealth. I is your income and cash flow. That's the first thing every new investor thinks about because it's tangible. But the other things is where you really build wealth. D is your depreciation, your tax benefits, absolutely dramatic. Learn, if you don't know about 1031s, learn about them. If you don't know what cost segregation is and accelerated depreciation is, you have to learn about that because that can save you tens of thousands, if not hundreds of thousands of dollars in taxes every single year, like it does for us. And it's available to investors, right? E is your equity that build up as the tenant pays a loan down. A is appreciation, as all markets go up in value over time, regardless of fluctuation. And L is leverage. Understand what your leverage options are. Like if I'm talking to you, if you're hearing this 5% down loan option for the first time, maybe you aren't aware of all the loan options that you could utilize out there to make yourself a more strategic investor. So you just have to educate yourself on all those things. So understand how real estate works and understand which real estate assets and investing strategy is conducive to your goals. If you're a brand new investor without any experience and without any time, and you're not like a contractor, maybe don't go out and try to flip houses like you see on HGTV or everyone's telling you it's so much fun, because I've seen more investors lose their shirt trying to flip houses than otherwise. So I said I was going to be short, Eric. That was not. So I'll stop there.
That's fine. Yeah. So I'm one of those guys that on my first and only flip, I lost money on it. So I think I lost somewhere between 10 to 15 grand. I safely brought back my investor's cash though. But yeah, I mean, it's not as simple as the TVs and TV shows and et cetera speak about those flips. So that's a great answer. And speaking about understanding real estate, understanding investment from all aspects, from debt, from loan products to cash flow and appreciation, all of those encompass investing in real estate. And you have to get a working knowledge and a good knowledge about those aspects of real estate if you want to be successful within real estate investing. So great answers to each one of those questions. We're going to start wrapping things up, but before we do, we like to have our guests share a great personal development book or either a great business book. What would be your recommendation for the Moonlight audience?
Yeah, I'll throw out a couple that have always stood out to me. So just real estate investing in general. Obviously, everyone says the Kiyosaki stuff. That's great. But I liked Gary Keller's The Millionaire Real Estate Investor. That was just a really basic book about thinking like a millionaire, running your business like a millionaire, investing like a millionaire. And he talks about the 4 different stages of, being a millionaire, like investing $1 million, owning $1 million, receiving $1 million. Like there's really cool stuff. So I recommend that one. And he's obviously, the founder of the largest brokerage in the world, Keller Williams. And then also for business, I think the E-Myth, the Entrepreneurial Myth by Michael Gerber, I think that's a really good one. Talks about like focusing on your business, not in your business. Real estate is a business, at some point, even if you start managing your properties, like you always want to retire yourself from things where your time is better spent, like growing your business and bring in better people and better property managers and these things to actually run and operate your business for you. So that was kind of an eye opener for me.
Yeah. Great recommendations on both of those books. I can remember reading The Millionaire Real Estate Investor when I first got excited about investing in real estate. I took the realtor route for some strange reason rather than going into the real estate investing route. But I learned a lot along the way, even through that experience. But yeah, great book recommendations. Zach, we want to thank you for coming out to the show. You've been a wealth of knowledge. You shared how you got started, giving inspiration to the average investor that's working W-2 or they have a business that's their primary source of income, and showing us that through hard work and determination, you can achieve some level of success within real estate investing, even if you have W-2 income. So, Zach, if someone wanted to reach out and connect with you, what would be the preferred method?
Well, yeah, we want to drive everyone to our website, Eric. That's renttoretirement.com, renttoretirement.com. We put out a ton of public information about these different loan options I talked about different market analysis. You can see our turnkey new construction inventory, where you can buy them, $30,000, $50,000 below market value. So lots of information we put out there. If someone's listening to this audio, you can also text REI to 33777 and set up an appointment with our team to just discuss your goals, right? Again, we don't charge investors anything. We make our money through building and selling houses. We're here to add value and try to help you build a strategy that makes sense for you, and just learn about investing out of state in some markets that maybe offer better returns in your local area, because that was the single most beneficial and impactful choice that my wife and I made when we were investing.
Okay, great. Zach, once again, amazing job on the show. We'll love to have you back anytime.
Thanks again, Eric.